This week, how a proposed policy to reduce property taxes could actually raise long-term costs and reduce financial flexibility for Texas residents. We're going to explain how this proposal may impact home values and reverse mortgages. We'll do that right after this short message from our sponsor, Liberty Reverse.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back, and thank you for joining us. According to reporting by the Texas Tribune, Texas Governor Greg Abbott is floating a plan that would sharply limit just how fast property values can rise for the purposes of property taxes.
I'm here today to keep more money in your pocket.
This in the state that ranks number 3 for heck of endorsement loan volume. The proposal would reduce the current annual appraisal cap from 10% to as low as 3%, and also potentially expand that cap beyond just primary residences. Supporters argue that this would protect the homeowner from rapidly rising tax bills. And while perhaps a noble attempt to reduce a homeowner's property tax burden, economists and policy experts that were interviewed by the Tribune warn that this approach may not deliver the relief that people expect. Here's why. Property taxes are a relatively simple equation. The assessed value is multiplied by the tax rate. If lawmakers cap just how fast values can rise but don't control the local government spending, cities and school districts often respond by raising tax rates to make up the difference. In other words, homeowners may still see their tax bills climb, just through a different mechanism. In some cases, total taxes can even increase despite the appearance of property tax relief. But before we continue, thank you for liking and sharing these videos. It really helps our YouTube channel. So consider subscribing. That way you never miss any of our latest episodes. And also subscribe to HeckhamWorld.com for all of the latest reverse mortgage commentary and analysis. Now, this property tax proposal also has a less obvious consequence that's easy to overlook. Appraisal caps create a strong incentive for homeowners to stay put. Longtime owners will benefit from artificially low taxable values, while new buyers they're going to face a much higher tax burden on a similar home. As the Texas Tribune notes, this discourages mobility, reduces housing turnover, and tightens the housing supply. When fewer homes are coming to market, prices tend to increase, and that works directly against affordability, and it props up home values. Now, this is the first market distortion that would be created under the proposed property tax reform in Texas. Appraisal caps don't directly limit what a home can sell for or appraise at market value, but by reducing turnover, distorting tax burdens, and also shrinking comparable sales, that can quietly make valuations a little bit more conservative and markets less efficient over time. Case in point, lender overlays. Now, when government regulations materially interfere with normal price discovery and appraisals, comparables used in those appraisal processes become scarcer and less representative of the local market, and that could lead for an underwriter to push for a more conservative valuation or even an appraisal review. In other words, even though the appraisal cap doesn't apply to market value, the market behavior that is caused by that appraisal cap may influence lender risk models. So in conclusion, while Texas's property tax reforms wouldn't directly impact market values, it would reduce housing turnover, tighten inventory, and obscure market pricing trends. So homeowners would likely delay downsizing or even relocating simply to preserve favorable tax treatment, even when moving would make financial or lifestyle sense. As the Texas Tribune reporting, it makes clear, appraisal caps are often good politics, but are economically questionable. They don't address the underlying drivers of increased property taxes over time, and they can also create inequities, reduce housing supply, and complicate retirement planning strategies, yes, including reverse mortgages. And this is why policies like this deserve a closer examination, not just for what they promise today, but how they may quietly reshape financial options in the future. What are your thoughts? Leave your comments in the comment section below, and if you would consider sharing this on your LinkedIn network, we thank you for that. Don't forget, as I mentioned earlier, we have a YouTube channel. Be sure to subscribe. And if you'd like to catch up on your most recent reverse mortgage news, you can do that with our weekly podcast, Heckam World Weekly. We have both an audio and video edition. Listeners can listen and subscribe on Apple Music or Spotify. Thanks again so much for joining us, and we'll see you here next week for more reverse mortgage news, commentary, and analysis you only find right here at Heckam World. Have a great week.